Welcome to our presentation on lodge taxes, an educational and training presentation presented by the Field Operations Group of the Membership Department. This presentation will talk about history of taxes, identify taxes related to the operation of our lodges, identify issues related to the failure to file and/or pay taxes, and address help sources. Settle back and relax as we discuss lodge taxes. This presentation will take approximately 25 minutes. As we begin, let's first find out what taxes are. Webster's Dictionary officially defines taxes. Standing out in the definition is the word compulsory. Defined as some action that must be done. Taxes are based on specific laws and they contain that compulsory action. Taxes aren't new. They date back to 3000 BC. Initially, taxes were on property and were levied to pay for funding armies that would expand empires. A significant amount of government funding is derived from taxes. Taxes are also used to fund programs such as unemployment, Social Security, Medicare, Medicaid, schools, and infrastructure. It is said there are two certainties in life: death and taxes. And taxes get the final nod, as even at death, a final tax return must be filed on behalf of the deceased. As lodge leaders, you have a vital responsibility to file and pay tax liabilities accurately and on time. Although this presentation speaks directly about U.S. taxes, there is little difference between U.S. and Canada when it comes to the type of taxes. You will see that both countries have corporate tax returns, employee withholdings, sales tax, property tax, and special taxes. As an example, the annual gross income return in the U.S. is the 990. In Canada, it's the T2. What type of tax is applicable to your lodge and to whom do you owe? On the federal side, we have the income tax, which is that of the lodge itself. We have payroll taxes. These are those things that we withhold from the employees and or match. These include their income, which is taxable, Social Security, or in Canada, CCP, Medicare, unemployment, or in Canada, EI. On the state and provincial, or local sides, we have property taxes. We have income taxes. Normally, the income tax return, the 990, or the T2, is accepted by the locals as your return. Payroll taxes, sales tax, special taxes. In some cases, the lodge will serve as a tax collector, and in other cases, the lodge will directly owe the tax. Let's get started by talking about the federal taxes. The first form in the United States required is the I-9. This form validates that an employee is eligible for employment. Every employee of a lodge should complete an I-9, and it should be maintained on file in the lodge's office. The next tax form, applicable in both countries, is the employee's withholding allowance. In the U.S., this is the W-4. In Canada, it's the TD-1. Each employee should complete one of these forms at the beginning of their employment, and they should be offered to update the form each year as changes may become applicable. It is important that each lodge know how much tax should be withheld from each employee. This is applicable in both countries. The IRS and the CRA publish withholding guidelines and tax tables. There are also publicly available tax calculators. Most states and provinces tax employee income. Each state and province tax at its own rate. In the U.S., employers must withhold the applicable state rates from the employee's pay and remit it directly to the state. In Canada, the CRA acts as a collection agency on behalf of the provinces. Lodges should consult with their state and province for the appropriate amount of taxation. Lodges in both countries are responsible to provide an annual statement to each employee that will reflect the gross pay and the amount of tax withheld. In the United States, this form is known as the W-2. In Canada, it is Form T4. Lodges in both countries are also responsible annually to provide a summary of all gross pay and all taxes withheld. Here we see the example of the U.S. form, the W-3. A major issue in our lodges is knowing the difference between an employee and contractor. Both the IRS and CRA publish rules. In general, an employee is one that is directly supervised and unable to make independent workplace decisions. Failure to pay employees as employees can result in severe fines and penalties. Additionally, employees should never be paid off the books. When a U.S. lodge employs a contractor, it is important to have the W-9 form completed by said contractor. At the end of the year, if the contractor has been paid more than $600, you must issue them a 1099. Contractors that are incorporated do not need to complete a W-9. Examples of contractors hired by lodges that may receive a 1099 would include bands, karaoke entertainers, and some repairmen. Again, remember, if the vendor is not incorporated, you must complete a W-9. In both countries, when lodges employ contractors, and subject to the guidelines, they must issue annual compensation reports to those said contractors. In the U.S., it's the Form 1099. In Canada, it's the Form T4A. In the U.S., the IRS requires an annual summary and transmittal of all U.S. 1099 tax forms. This is made on Form 1096. Let's discuss employee taxes. In both the U.S. and Canada, lodges are required to withhold applicable taxes and other required withholdings. Taxes on wages are levied by both federal governments and state, provincial, local authorities. Lodges are required to make deposits of the withheld monies as well as the lodge's portion of matching or contribution monies. These deposits are made either weekly, bi-weekly, monthly, quarterly, or at other designated times. In the U.S., lodges must deposit federal and state local taxes to the taxing authority, such as the IRS for federal and the applicable state for state and local withholdings. In Canada, the CRA collects both federal and provincial withholdings. In the U.S., these federal deposits are reported on the 941 form, with an annual summary on the Form 940. In Canada, they are reported on the PD7A. In addition to the normal income tax, employers must also handle unemployment taxes, which are both withheld and contributed by the employer for each employee. This tax is normally remitted with the income tax. The federal tax rate is generally a flat percentage. In the U.S., it's the FUTA. In Canada, it is the EI. State rates can vary depending upon the history of claims filed against you as an employer. In addition to unemployment withholdings, there is also Social Security in the U.S. and CCP in Canada. These two are remitted along with the normal income tax withholdings. Although our lodges are considered tax exempt from income, it is required that they file an annual gross income tax return. In the U.S., this is filed on Form 990. In Canada, it is filed on the Form T2. Generally, the form is due within a short period of time after the close of the fiscal year. Our lodges close their fiscal year on April 30th, and the form is then due in Canada 6 months following the close, and in the U.S. on September the 15th. In the U.S., the Annual Gross Income Reporting 990 form may require the lodge to file a supplemental schedule. Here you see a list of those schedules. Complete guidelines on which schedules must be filed is available from the IRS. Additionally, Moose International has provided some training assistance on the Moose International website. When lodges fail to file a tax form, fail to make a required payment, file an inaccurate form, or pay insufficient payments, they will be subject to fines and penalties. Fines are higher on any withholding tax because you take monies from the employee's pay and you owe it to the government. In the U.S., this fine could run as high as $150 for the first day you are late. You will also pay penalties and interest. If your 990 is not filed by September the 15th, or your 990 is not complete with all information and schedules required, there is a $20 per day fine. If your 990 has failed to be filed for 3 consecutive years, you will lose your tax-exempt status and have to reapply. Almost all the time, fines and penalties can be abated through communication with the IRS. However, interest is rarely waived, and the IRS is not in the business of loaning money, and they do not have favorable interest rates. Most states have a tax on alcoholic beverages, generally known as an excise tax. In many cases, this tax is collected and remitted by the distributor of the products to your lodge at the time you pay for the product. But it is possible your state applies the tax at the point of sale to your individual members. This tax is handled in a similar fashion to normal sales tax. Check with your individual state to determine any applicable excise tax. Here's a good example of your lodge being a tax collector. Nearly all states collect sales tax on food, beverage, and merchandise sales. You are responsible to collect the sales tax on your sales and remit the applicable sales tax to the governing taxing authority. However, most lodges price their products to include the sales tax. It is important also not to overpay the sales tax. That is how you report your gross sales. For example, if you sell a bottle of beer for $3 and the tax rate is 7%, you are actually selling the beer for $2.80. The sales tax collected is 20 cents. If, on the other hand, you report the gross sale at $3, you will owe the taxing authority 21 cents. Think about that math on that 1 penny and the number of bottles of beer you may sell. The amount can add up quickly. Moose International's training department, in connection with the field staff, developed the weekly envelope to include, on an Excel spreadsheet, a tax calculator that will help you report the actual gross sales. To make certain that you are collecting the proper tax rates for your state or province, consult with their website. Generally, this information is found under the Department of Revenue. Another major tax for our lodges is that of property tax, generally assessed by the state or local governing authority. In some cases, a lodge may be tax exempt. Taxes on property will include the real estate, that is, the grounds, buildings and building improvements, and could also include other aspects or assets such as inventory and vehicles. Check with your local, state, and/or local governing authority to understand the property assessment that you will be paying tax on. As a part of this program, we said we would describe why it was important to pay these taxes. Let's go through the list. First, tax liability doesn't go away. It's established by enacted law, collected by governmental authorities, and as we told you earlier, it's compulsory. Secondly, tax liability of a lodge could become personal liability of its officers. We know that as officers, you do not want to be in that position. Past due taxes carry costly penalties and interest charges. What a waste of a lodge's good money. Some tax liabilities create foreclosure actions and liquidation of the properties. These are primarily property taxes. And failing to file that 990 can cost you your tax exemption. Therefore, the lodge would owe income tax to the federal government on its gross earnings. We mentioned earlier that typically failure to pay property taxes will end in a lodge property being sold at a public auction. There is no reason for a lodge not to pay its property taxes timely. We mentioned earlier the severity of failing to pay the employment tax. Here, the lodge as a tax collector is holding funds from the employees that are owed to the government. Well, here is a list of those things that could happen when you fail to pay those employment taxes. First, the IRS, or perhaps the CRA, will seize your bank account. Next, there will be interest and penalty assessments. Seizure of property is possible. Audits will more than likely be generated against the lodge by the taxing authorities. So what are the possible consequences for failing to remit the sales tax that's collected? Well, there could be interest and penalty charges. Could cost you your business license. Could cost you your gaming permit. Could result in a lien being placed by the state or local authority on your property. And in some cases, could result in jail time. Overall, these items could result in the closing of the lodge. Let's review what we said could happen when you fail to pay the 990. Well, there could be interest and penalty charges. That could result in an audit. There will be loss of the tax exempt status if it's 3 years or more. There could be bank account seizures. All of these things could occur and place a hardship on your lodge. Rarely do taxing authorities seek jail time. Their primary function is to collect the monies due, and they will exhaust all means to collect those funds. However, willful tax fraud might land you in prison. Our overall goal was to make you aware of the responsibility and the need to file and pay timely on all taxes. Ignoring or running away from tax liability won't make it go away. You have to deal with it. We have explained that taxes are based in law and that the tax collecting agencies will exhaust all means to collect the due funds. This presentation was deemed necessary due to the number of lodges that each year face closure because of their failure to file and pay taxes. All of the power to correct this issue lies within the lodge. Oversight by the Lodge Review Committee to make certain that taxes are paid and that they are filed. And Board of Officers' attention to detail, making certain that they have confirmed that all taxes have been filed and all payments have been made. It is part of the fiduciary duty of the Board of Officers. Does your lodge need assistance on filing and paying its taxes on time? First, we urge you to have a budget wherein you can plan ahead for those funds necessary to pay your taxes. Secondly, we would suggest you establish a calendar that shows you clearly the date when the tax filings are due. In this manner, you can plan ahead. Your territory manager is available to provide assistance on planning and handling your tax issues. If you need assistance, please don't hesitate to contact your territory manager. We thank you for giving your attention today to this presentation on lodge taxes. We'd like to hear from you. Do you have a comment about this presentation, or do you have a subject matter you'd like for us to cover? If so, please email Mike Rios, Director of Membership. His email address is mrios@mooseandtail.org.